Good morning, everybody. Thank you for joining. This is Dee Dee with Power 3 Trading. I'm not here just to teach you the strat, but to teach you how to profit from the market using the strat techniques. If you have any more questions regarding the strat, please reach out to my guy, Rob Smith at Smith's in the Black channel, Robin the Black on Twitter, or at sepiagroup.com. So Friday was an interesting day. What I'd like to do this morning first is kind of take a look at the broader market. All right. And let's see where we go from here. So when the market was trending down, we kind of had our trend lines to the downside because we want to see where our potential targets are. But then the market flipped on us, right? So looking at our monthly, that July month, we saw the market trade up. So we drew our broadening formations to the upside, and we can see how price traded up to our levels and then started to reverse again. Fed speak on Friday, there may be some pain coming. So the markets, and for whatever reason, thought, hey, we're going to have this V-shaped recovery like we had during the pandemic. Not so much. So let's take a look at, I want to zoom out on the Qs. We'll look at the Qs and the SPY, because a question came up about the volatility in the market that we've seen over time. So I wanted to zoom out so you guys take a look at this. Years ago, so for those of you who were not even born yet or just not trading, we can go back on this particular chart. So this is a trading view back to 9/11, right? So early 2000s, we can see when the market had its collapse during 9/11, right? This is September 1st, guys. Terrible time in our history. So you had the market peak during the bubble, right? Tech bubble, Y2K. And then you had the market collapse after 9/11. It hit some lows here right around 2000, September, right? 2002. Very difficult time. This was the time when don't ask me why, decided that I wanted to be a broker. And so during this moment here, I joined Edward Jones as an investment advisor, and it did not work for me. So I went back to my skilled job in the world of audit and consulting. And so what I wanted to show you, though, was here was 2000 bubble, right? Then we had our 9/11 event, market crash. During this time, you can see the range that price traded in. And then we had another event, market crash again. This was the peak here before the financial collapse in 2007. Still trading inside this range, though, from 9/11. Finally breaks out of this range, guys. Finally breaks out of this range. We'll call that in 2012. And from that point until you can see here, this is when, right here is when Trump came in. So we had Obama here, right? So we had Obama in this range here. And you had Trump come right here. What I want you to see is the big difference between the monthly candles when there was a significant event that occurred and when the market just was a sleepy time. Tick, 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 small dips, tick, 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 tick. I had this market decline here. Can't remember what happened there. Tick, 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 right? And then the media hung on Trump's every word. And then you start to see the volatility in this market, right? Not so much events per se, but just Trumpism. Here we go now. Price starts to decline here. We saw another little set off. Why? Because you had months of two ups, two ups, two ups, right? Little dip here, two up, two up. Saw the market come in a little bit here. But then you had, now we're in the 21, 2020. Here you go. Now you're in the Biden era. But I'm not going to put this here. I'm going to put it here because this was the pandemic, right? So Biden comes in. Now we have pandemic. Price dropped significantly in 2 months. And then we had what they're calling the V-shaped recovery. I want to show you the difference, though, between what happened here. So remember, this was 9/11. This was 2000. This was Y2K, right? We had our 9/11 event here. Price traded above this range, and it took how many years? 17 to break out of that range. And I'm not saying that's going to happen again. That's a long time because we had a lot of events, right? We had our 9/11. We had the financial crisis. We had a lot going on before we saw a new high. Now we get this high and we trade up, and then we have this event, right? Pandemic. Didn't trade down to our Y2K high. Nice dip here, though. It was scary moments, and we had this V-shaped recovery. So I'm going to put that line here. And because we are trading back down inside this range, guys, I'm going to just delete all of these lines here because we don't need them. So we're going to just delete those because we've already hit those targets, and we're going to redraw. I'm going to leave this one for now. But here's what we're seeing. Prices traded two up. It traded two up. Had some dips along the way. And then this is our high before, and this is we're looking at the Q. So this is our November high. This is now the range we're trading in. Pandemic high, well, not high, but when the pandemic finally hit the street, because remember, if you were paying attention, we were hearing the noise, which why I was thinking, this is a problem. We were hearing the noise from China in Q4 of 2019, but we didn't take action. It wasn't until things got really bad and the market sold off, and then we had this V-shaped recovery. Now we're in this trading range. We're in this trading range. We have some two downs here on the month. We had this outside bar. We had this two down, right? It took this early. Now we had we had this two down. It took that, right? So coming in the first half of the year. Does it retest? I don't know. But what I want you to think about is, guys, we're in this trading range from this pandemic open, so this February high, when we finally got no news that, oh yeah, this is a real problem, to this November high. We're in this trading range, and you have to think about what this market is going to look like now going forward. Some were asking the question, is this a new bull market once it started trading back above, I believe, the 200-day. I don't use the EMA so much, but I think when you're looking at trends, they can provide a lot of value. But with the Fed now trying to manage inflation, right? This is what we're dealing with now. We still have supply chain issues. We still have this war with Ukraine. We don't know how that's going to spill over to Europe. We're still a global market. Although my buddy Jim is saying that, some economists, analysts are predicting we're going to be a little bit more regional going forward. But today, we still have to be concerned with globalization. And so with that in mind, I am paying attention to this range. We're going to still trade it, right? We can still trade, all right, obviously, right? We're looking at months. But when I look at my long money, I'm still a little bit more cautious. I'm not there yet, okay, guys? I'm not there. And here's what I want you to see on my CCI. When CCI is trading above 100, I don't care what time frame you're looking at, the market is still when it's above plus 100, it's still very positive, right? So the bulls are still winning. I'm still looking for longs. Once you cross down below plus 100, I'm a little bit more cautious. Below zero, I'm in what I call my sell zone. So I'm still in the buy zone, above zeros, in the sell zone, below zero. So in my view, until I see this cross back up, right? Sustainable move, momentum on the monthly, I'm not looking to put long money into the market. So that's where I'm at. Just my opinion, guys. We look at the SPY. I'm going to go ahead and remove these lines, but we look at the SPY on the monthly. It's the same. Okay. When price action starts crossing down below zero, I'm a little bit more cautious, right? And I want to see a sustainable move above zero for me to put long money into the market. And as long as CCI stays below zero here, guys, I'm looking for shorts and long term, right? I don't know of how sustainable this market is to the downside, but I'm not ready to put money in the long side. IWM, we'll remove these. All right, so you can see how it traded, right, during the, and you can see the range. Maybe you can see the range. All right, you can see the range here. We'll just draw some horizontal lines. The highs, right? We had some inside bars, low, and then it went inside again. So you can see this range it traded in. Pandemic, broke below, traded back up, and then you see price crossing back above this high. So zoom out on your charts, okay? Zoom out on your charts if you're going to play this market long. Now, when I swing trade, of course, I'm using the monthly, and I like to use the 2 and 3 week, but we're not going to be talking swing trades here. Just don't have enough time to do that. So we're going to see how we're going to play this market now that we saw this big sell-off. So when the Fed is saying there may be pain, we don't know exactly what that means, but the Federal Reserve's job is to manage inflation. It's still just super high right now, and as they say, when the market is hot, guys, you got to cool it off. If the stores are still packed and people are still spending an exorbitant amount of money on housing, and still, spending way too much on discretionary items, Federal Powell is basically saying, I'm going to cool that off, and there's going to be a couple ways we're going to do that. We're going to keep raising rates. Now, Friday, we're going to have our jobs numbers, so we'll see what that looks like. But that then, if the rate hikes don't help and people are still feeling pretty good about themselves and their situation, and they continue to spend, that's not going to help with inflation. So it'll spill over to labor. So we'll start to see if there's any impact on that. Looking at labor, this job market this week and later on in the year. So just be aware of that. But right now, Friday, we had this big sell-off. And this is IWM. And you can see price went 2 up, 2 down on the daily, and it took out its 3-day range. So I like to look out 3 days that kind of give me a gauge on whether or not price is going to continue or hit some target. So I like to draw my broad informations on the 3-day. And so when it hits my target on that 3-day time frame and reverses, I look for opportunities to go short. Now, so here's the deal. It's already taken out that 3-day range, and you can see this orange line is this gapper. Tomorrow is a 3-day flip. So what I'm looking at is if price trades, so this is IWM, right? It looks like it already wants to trade below this low. It's going to gap down. If price stays below this level, I'll look for price to continue to trade to the downside. Because it's a gapper, guys, we're not jumping into this market. But if price trade gaps down, as it appears, we still have an hour or so to go. Oh, it's 7:38. We still have a couple hours. All right. So we can have any movement here in the futures. But if price gets below this level, 118, 187.17, and then reverses on the day, all right, I'm going to use a lot of caution because you're way red here, yellow on my with my color here. But on a 3-day, it's got to take this guy here. Look at your daily. But if it gaps down and goes back in, guys, I am not looking to go short here. I need it to trade below 187.17 for me to have any confidence that this is going to trade lower. Remember, this is the 3rd day of the 3-day move. All right. Day 1, we had this big 2-down day on day 2. Now today is day 3. You may not see this kind of move today. It has to trade below 187.17 and stay down. Okay, let's look at the Qs. Again, it's Monday. I'm not, we're just not clear, right? But you look at this weekly, same deal. You got this outside 3-day. A lot more room here on the Qs to go lower, right? So you had this 2 up that closed down, another 2 up candle on this 3-day range. So it closed this small gap here. So I'm looking at this range. It looks like it wants to take this 2 up candle here, the low of this 2 up candle, but you still have a little bit more room here. But I see this outside candle here on the daily. So you had this is this range here. But you know what? It's got to take this guy first, which is this. Actually, this low here is lower than this outside candle. So what I'm going to do is I'm just going to draw this horizontal line here. Again, guys, this is day 3 of this 3-day candle. You know what? There may be right here. You see this again, which is why I use multiple time frames. You see this 2-down candle here, and you see where price is gapped down to. It's got to take this 2 down on this 3-day right here before it can go any further. So you're inside, you're still going to be inside this range, this 3-day range, but it's got to take this guy first. And it looks like it's hitting it right at the gap. So we're going to use that 302.69, this low here. We want it to stay below this range before it will go lower. So again, gapper Monday, tricky day, we don't know. So if price is going to hold, it may trade down to these levels, come back up, and then we see another leg down on tomorrow. We don't know that. Today is a new 2-day flip, guys, but you had an outside bar. So I'd be really careful. Today is your 2-day flip, but tomorrow is your 3-day flip. So real careful with these moves. I'm looking at this target here, about 302.62. And then let's see if it holds. You could get chopped up in this. So I'm going to be careful with these outside bars on the daily. I am still holding my puts, but the way I'm going to look at this, even though I think my expiration is the 16th, the way I'm going to look at this, guys, is price has got to stay below yesterday's low. If it starts trading back inside our 3-day, that could be setting up a reversal. We don't know. But when I look at my CCI, I'm looking for price to continue its downward trajectory. Stays below 0 here. I like, I have a little bit more confidence this will continue to trade lower. But if this guy trades back above this high, let me just say it this way. On the Qs, if CCI trades back above this peak here at negative 38.29 on this CCI, then I may look to exit my position there. But as long as it stays below 0, I have some confidence this market will continue to trade lower. All right, and then let's look at yeah, same deal. Okay, you had this big outside bar, 2 down, 2-day flip here. So you had this 3, 2 down, 3, 2 up, comes back in, let's see where we are in this. Yeah, we got a gapper here too, guys. So looking for price to trade below this gapper, you can see that at 401. This high here is about 395.78. Looking at this outside, this is 398. I'm going to put this here for now, but let's see if price will close this gap this week. May not happen today, but it might. You know, this Fed talk was pretty hawkish. But here's the thing. You know, the market is going to feed off data because that's what the Fed said. They're still going to be data dependent. But if they see the labor market coming in a little soft, maybe the market will turn up. But that's Friday, guys. So we'll have to wait and see. But let's use caution. Oh, and did I not mention we only have a few days left in the month? So Wednesday, right? So let's see how far down this market trades to the downside, knowing that this is the end of the month, but we're going to use caution. If it trades back, you know, takes this green on the month, I don't know. 409.15. So prices got to stay again below Friday's low for me to have confidence it's going to continue to trade lower before the end of this month. Okay, so we're going to use this as our target here. We're going to use this as our target 398 because it's got to take this 2 down bar, and this is a 2-day flip. So let's look at our 2 days again on the Qs. Yeah, that 2 down candle right there, and a WM, or it was a 2 up, but the low of that 2 up candle, and then this outside bar here. So I'm good there. All right, so today, because today is a new 2-day flip, that's where we'll leave it for the broader market. Now, I'm looking at Friday. Let's see what happened Friday, guys, and let's talk a little bit about our actionable signals. So if you've watched any of my videos, you know I've been using that 18 for my signals. I will drop down to the 6 or 9 if I like the trade, meaning 2 up, 2 up, 2 up. You've got to trade. You have to go down to a lower time frame to get into that market. So if there is a 2 up candle, for instance, you got this 2 up here on the 18, right? You got this doji. I may go to a 6 or a 9 to see where my entry would be on that. Let's just so you can see what I mean by that. Because you're looking for your actionable signal, it does not matter which time. So if I like the move, meaning CCI is above 100 on the 18, price is trading in my buy zone, but it's above plus 100, that's strength in the market. I'm looking at the shorter time frame for my signal because this is a 2 up continuation. So you need your inside bars or your 2 2s on the shorter time frame. So that's what I mean by that. Okay. Otherwise, and that's in the first hour, your first 60. Guys, once that 60 flip happens, I am not looking for my signals on the shorter time frame. My signals are coming off of the 18. You can use a 15, you can use a 30. I like the 45 and the 90, but after your 60 flip, to try to scalp a trade that's trading inside your 60-minute time frame, you're likely going to get chopped up. You have to wait for that next 2 on that 60. So if it's that inside bar is still forming and you want to scalp, go to your 15, 18, maybe there's a trade there, but get in and get out. If you're inside that 60, I prefer not to trade inside bars. So I'm waiting for the next 45 or 90 flip. Okay. So the way we traded this on Friday, once Fed started to speak, you saw big moves in this market. So we look at it, and we'll look at our economic calendar. I don't think there's anything today, but we talked about that. Look, Fed speak is at 10 o'clock. You want to know, so when you're preparing your day, you want to look at your headline news. Is there anything that could potentially move this market? Well, they've been talking about it all week on CNBC, Jackson Hole. So we know this is going to be an important event. And it was. Fed speak happened at 10 o'clock. This is our 10:06. So again, I love my 18-minute flips. It helps me because there's a lot of sub triangles that happen. You know, traditionally people use the 5 and the 15, 30, 45, 30, 60. I'm a little odd on that. I like multiples of 3. And so 3 being my base. And so I was trading the 3, got a little too fast for me. I was like, you know what, 6 works great. So I went to 6 and I had to do a multiple of that. And that's how I got to 18. It does not line up well with 45, but actually it works in my favor because I can use both of them as actionable signals. So anyway, so I was on the cues, and then I'll show you my NVIDIA trade, but I waited. Guys, you got to wait. Remember, these lines here are my average daily range. Let's talk about that, especially since I got a new follower here. The little pink line and green line, that's our average daily range, right? The green and the red line does absolutely nothing, right, except to tell me that that's the high of the previous day and the low of the previous day. I do that because I'm looking at quite a few stocks and I want to be able to see what goes 2 up or 2 down on the daily. And so that's simply a script that I use just to tell me that that was the low of the previous day and the high of the previous day. I do not use it for broadening formations, for trend lines, or anything like that. It's just a marker for me to see the daily high and low. Okay. So we got our 2 up. It traded 2 up here, took that day high. And so you may be looking at this and saying, okay, well, why didn't you go 2 up here? Fed was speaking. Market was still moving. I don't know if price is going to continue. So I was patient on this. I was patient on this. It went 2 up. I'm waiting for it, waiting for it. But then when it went 2 down and I saw, because I'm watching all of these guys, I was like, oh yeah, here we go. It's below average daily range. And then CCI dropped below -100. I took this. So here's my entry. You go low on the 2 down, and here's my stop. And you're prepared now for this market. If it traded 2 down and at this point, Fed had stopped speaking, his speech was short. It goes 2 down here. If it comes 2 back up, guess what? This is my stop. I take that loss because now there's a potential for this going outside. I don't want to hold this trade because it traded 2 down. Remember, if once it goes, takes out one side, if it fails, it's going to take the high of that previous candle, that candle in which you entered your trade, not necessarily a previous candle. But if it's going to go outside, let me say that again. When price trades 2 down, like it did here, and it reverses and comes back up and takes the high of that opening candle, that candle that you entered, that triggered your entry, there's a potential now it's going to reverse and go outside. So I'm going to put my stop at that open because I don't know if it's going to reverse and be a failed 2, but I don't want to risk that much money, you know, testing the waters, right? So we're going to take our entry and we're going to put in our stop loss. We know what we're going to lose on this if it goes higher. It does not, guys. It does not. It drops and it drops and it's below our ADR, which is the other thing that gave me a little confidence because you're looking at these other trades here. So Q's was in the middle. When price traded closed, it closed back below its ADR. So I like that move. I want to trade this market lower. SMH was the same. Well, let me get this lined up. So this was SMH, chip stocks. I was in the NVIDIA, same deal, guys. You saw the move, price traded up. What was CCI doing? It was trading back down. You wait for that, wait for Fed to stop speaking. If you're trading headline news and the market is being erratic and it's whipping around, go on that shorter time frame. Let's see what's happening. but you want to wait for that market to determine which direction it wants to go. And so we were able to make a little profit there. So I'm still holding my Q puts, and so we'll see what happens. Okay. Today, let's look at the market real quickly. Economic news. I did not see anything this morning. All right. So let's see what the market is going to do. We're going to play this the way we would normally. It's a gapper. It's a gapper. So we're going to create our short list with whatever stocks you have on your short list. This is my short list. Tesla and NVIDIA are generally stocks that I watch every day. Microsoft I've added because I like the volatility that I've seen in Microsoft. And then this guy, it's coin. I'm looking for something here to trade other than that. So let's just look at what my gappers, gapper list, what it's showing us today, because it's Tesla. So we'll take a look at that. Not a lot of gappers. So guys, I have my screeners here. A little more is popping up. Airbnb, we'll take a look at it. I don't like the put or the options on Snowflake, but if you're trading Snowflake common, I definitely look for a short there. Datadog, we'll take a look at TDD. TTD doesn't move a whole lot, but it's gapping. So let's take a quick look at these gappers on a broader chart. So looking at Tesla, again, our 2-day flip, we have this inverted hammer, if you will, but looks like it wants to trade lower, guys. I'm going to stick this right here. I'm going to stick this right here. Let's see if we can get Tesla to trade to this range here. All right, so it's got to take out this level. It looks like it is in pre-market. So let's see if we can see that. The low of this guy is 285.54. We needed to stay down. This is 285.03. So price stays below 285. We'll look to short. We're going to use our ADR though, and this will be my target here on Tesla around 278. So it continues to trade below this range, 285. Price on Tesla continues to trade below 285. You have this outside bar here. We'll look to short using our ADR. This will be my first target on 277. Square. It went outside on this 2-day. Again, you still have a move down here. It looks like it's going to gap down to this range though on the 3-day. So if it trades below this this level here on this 2-down candle, I'd be looking maybe for a reversal. We'll have to wait and see. It's got to trade below that level for me to have confidence it's going to continue to trade lower. That also looks like the low of this inside week, right? So here on the week of July 25th. So it's got to continue to trade below that for me to have confidence it's going to trade lower. But remember, guys, we only have a few days left in the month. We only have a few days left in the month. So the bias is definitely to the short side, but this is going to be a gapper day. So be careful. Price may gap down and reverse on us. So we will not be trading before the first 18 minutes. Coin, yeah, maybe if it continues to trade lower, it takes this week out right here. Looks like that'll be, this 2- and 3-day candle, guys. So we'll have to wait and see. Yeah, take that 2 down. It's got to take this low here first, about 60.80 right here. But yeah, if coin trades lower, high here 63.70, 63.70. If we can get price to trade below this range here, because I want it to be, it's inside this range, it's got to take out this high. So if price trades below 63.70, I'll look to continue to short here on coin down to about 59.42 because it's got to take out this outside, I mean, this big 2-up bar here, all right, because you had a gapper on Coinbase a few weeks ago, right? So trade below 63.70. I expect it to continue to trade short. DoorDash, yeah, we may get a move here. You had an outside day. Look at the weekly. It's definitely an exhaustion, hitting some exhaustion, guys. You didn't really get that move to the upside, so I'd be careful with DoorDash. You're hitting maybe close to some all-time lows, 56.67. Remember, this was an IPO. So I'm yeah, I don't normally trade this name, but if it stays below this low here, guys, it takes out this outside bar and stays below, you could see this retest. All right, trade back down to 56. So keep an eye on that, but be careful. Poor Roku. I like the brand, but we've talked about this. It's just taken quite a beating, with smart devices, smart TVs. It's just hard to see the moat in this company, right? The barriers to entry are so low. Everybody has an app now that you can download onto a smart TV and get the same thing. So, but you're inside this two-week pattern, guys. It will probably break down, but because it's just been, I mean, if you had taken this short here, you could have just held this guy. Talking about swing trading to the downside on Roku. My gosh, $500, $490. So I'd be careful there because you're just going back into the lows here. But definitely it's a short. I'd play it short, would not be looking for longs there. But again, our biggest opportunity is where we have magnitude. I'll try to talk about that really quickly. Let's hit Airbnb, and then we'll wrap this up. Because it is a name I do trade. I really don't trade the rest of those because they don't move that much. Airbnb. Airbnb, I'm probably going to avoid today, guys. Just because you're 2 up on this 3-day, not 2 down. So I'd take a look at Airbnb tomorrow if we see this trade below this range. But there's a possible outside day here on the 3-day. Let's see what the month looks like. The month is still up. So I'll probably avoid Airbnb. I'd like to see maybe in September, see if that trades to the downside, and maybe we can get a move down further. But today I'm probably going to avoid it. All right. So if you look at this on a shorter time frame, let's just talk about Tesla and then we'll wrap it up. Again, we're going to wait for the open. We're going to wait for this market to open. It is a gapper. Okay. This is a gapper. So what do we do with gappers? We have to be patient. We have to be patient because we want price action. We want to see where price action is going to go before we determine whether or not it's going to continue or reverse. So if price trades down and hits our broadening formation, right? So it's already below this level, 284. We're going to call it 285. Here's my view. Price has to stay below this range for me to have any confidence it's going to continue to the downside. So we're going to use our ADR. We're going to let price gap open. Let's see if it trades back up, because here's what I did. I drew this line from this 2 down. Why? Because it's already trading outside this cluster here. So if we put this on our 3-day, right, it's already traded outside of this 2 down candle. 2-day. It's already trading outside of this 2 down candle. So this is why I want it to stay outside of this range. I want it to stay outside of this range. because this is a 2 down, 2 up, 2 down. Today is our new 2 down, our new 2-day flip. It's already outside of this range. I want it to stay outside of this range for me to have any confidence it's going to continue to trade lower. If it trades back up inside this range, guys, you got to tackle this, and it may be choppy. So that's how I'm seeing it. So let's make sure if we're trading this, it trades back above 485. We're going to use some caution. We do not want to get trapped inside a 60 or inside a 90. Let this market open. We're going to use our average daily range. Once this forms, and you'll see it on the shorter time frame, wait for that flip, you're going to have a 2 down candle, right? Price is going to trade 2 down, likely on this gapper. You're going to have this 2 down. It may go 2 up. Careful. If you're going to take that trade, you need to know where your target is. Guys, this is going to be my target. If price gaps down, 2 down, and trades 2 up, this will be my first target. And we're going to use our ADR. If it's below ADR, we're going to look for shorts. If it trades back up inside ADR, you're probably inside bar. We got to wait, and we'll look for an afternoon move. If it trades above our high ADR, there's a potential for price to continue higher. And of course, we're going to use our CCI as our guide. Below zero, we're looking for shorts. Below zero, looking for shorts. Above zero, looking for longs. All right, we're going to wrap it there, guys, with my script for the day. Proverb, or my favorite script that we use every day, Proverbs 21:5, the plans of the diligent lead surely to advantage, but everyone who is hasty comes surely to poverty. It's a gapper Monday. It's a gapper Monday. So don't rush into this market. Let the market open. Let's see whether or not it's going to hit our low ADR in reverse, or if it's going to trade below that low ADR, and let's look for our signals. 2 up, 2 downs. I prefer my signal on the 18. I do not want to go 2 down, 2 down, 2 down on that 6 minutes. I got to get a 2 up. If it's inside bar, look to see where you are on that daily. You may be at some exhaustion. If it's taken out one of these 2 down candles, guys, and it goes inside on that 6, pay attention to your 30 and 60 flips. You may be getting trapped and taking that short, and it reverses on you really quickly on that 30 flip. So wait for your flips, okay? I use the 18 flip and the 45-minute flip. That 45 is at 10:15. It's okay to wait. Be patient. All right, we're going to wrap it there, guys. Thank you for joining. I appreciate it. Take good care, everybody.